You've probably seen this meme on social media, and it's catchy, but is it true? Is it a horrible time to buy a home, or is it a great time to buy a home? And it's referencing really the record low rates of last year versus the high rate environment we find ourselves in today. Last year, it was really common for home buyers to pay $100,000 and more over the list price on homes. It was insanity. We had so many clients that just couldn't win a home because of the historic demand. So what we had was record low rates, but they came with record high costs. So which is better, $100,000 over at 2.99 or $30,000 under at 7%? So let's take a look. And when you say it out loud, it's a little weird. I'm trying to validate the accuracy of a meme. But I did want it to be as accurate possible, so I used a property listed for sale at $650,000. In 2021, I don't think I saw many homes in this price range sell for less than $100,000 over list, so it seemed like a good price point. So a home listed at $650,000 last year would cost you $750,000. 2022 is a different story completely. The competition has calmed down a lot. We're back to a more normal market. You can find a deal on a home again. $30,000 below is not unrealistic at that $650,000 price point. Both scenarios I use 20% down to keep it simple, but if you look at the loan amount differences, financing today is $104,000 less on the mortgage than if you financed last year, and that's drastic. But even though the loan is $104,000 less, it immediately jumps out that the payment is still $773 a month higher. That's a cost of $9,200 a year for buying the home now versus last year. And because economists think that we'll see rates dip back down in 18 to 24 months as inflation is brought under control, I also wanted to see what the cost looks like over that period of time until we think there's going to be an opportunity to refinance into a lower payment. And so it adds up to a little over $18,000 in extra interest payments over 2 years. That is a ton of cash. So that settles it, right? It's obvious that there's a clear winner. It is much better to overpay for the home in a low rate environment, right? Well, not so fast. This is where most people stop. And it's because we've been programmed to just compare payments. We get blinded by the fact that it costs $773 a month more by buying now. And so our brain screams, this is a bad deal, avoid it. We should just wait and we'll see when rates go down and then we'll get a good deal. But did you know that a low rate and the wrong strategy could actually cost you thousands upon thousands of dollars? And this is really a perfect example of that. So we always try to educate our clients to look at all the data and consider how it affects them, not just now, but in the future. And how does it impact their goals? So could buying now actually be better for you financially, even at a $773 a month higher payment? And the answer to that is yes. And I'm going to show you how. So what we did was we made the mistake so many people make. We just looked at rate and monthly payment, and we didn't look at any of the other factors. So we were mesmerized by this low rate, and we forgot to look at cost. Did you notice that that the down payment last year cost you an extra $26,000 out of pocket because the price of the home by paying over list was so much higher? Probably not. We're so worried about saving that $18,000 in the monthly payment, we forgot that we spent an extra $26,000 to get that low rate. The higher rate over 2 years actually saves us about $7,400. And yes, buying now has a higher monthly payment, but you could offset that higher monthly payment with the $26,000 you saved, and you're still going to have money left in the bank. But we're just scratching the surface. There's way more to consider. And this is where the story really flips, and the clear winner really starts to look like the big loser. So we've already identified that short-term payment savings is an illusion, right? Because it costs you $26,000 to save that $18,000. The long-term benefits are vastly more one-sided. When we look at the investment gain, that's where it really starts to become clear. So if you look at this home and what the value would be estimated in 2 years, and I didn't just make up numbers, I pulled historic forecasted appreciation for the county I'm in as an example, and based on this data, the home would be worth $701,000 in 2 years. So let's pretend the down payments are the same and take that completely out of the equation. So buying now, though, is still significantly better. Because we were so focused on payment, we forgot to look at appreciation. Did you notice that if you bought the home in 2021, you're still underwater by almost $50,000? But by buying in 2022, you already have $81,000 in appreciation 24 months later. We also want to look at the equity you create because you are paying that down. In 2021, for example, high cost, low rate, you'd be paying down that balance by a little over $13,000 in 2 years. 2022 example, low cost, high rate, we're paying down a little over $10,000 towards our mortgage balance. When we look at the equity and the appreciation though, buying now is still a clear winner. So buying in 2021, remember high cost and that super low rate, you've saved $18,000 in payments to lose $35,000. But if you bought now, which is the higher rate at the better deal on the home, you're going to spend an extra $18,000 to make $91,000. That's a 500% gain on an $18,000 investment. But when we add it all together and look at the rate, the payment, the cost, the equity, the appreciation, when we really take everything and look at the whole picture, the lower rate is actually losing you $61,000 versus a gain of $91,000 over that 2-year period. That's a $150,000 swing. And we have to embrace this plan of the date the rate, marry the house, divorce the landlord. We see the higher payment and we think it's forever and we miss the bigger opportunity to create wealth. In fact, almost no one is ever in the same loan for the full 30 years. We miss out on the opportunity these higher rates represent, or higher rates present. The data proves that the most important part is to buy the home right, the marriage. We're also dead set on marrying the rate, which is really the most temporary part. We're going to date the higher rate to marry a great home at a great deal. Then we're going to upgrade that rate as they come down, and then we have the best of both worlds, a great deal on a home and a great rate. The fact is you're unlikely to get both of those at the same time. And it's unlikely because the world runs on supply and demand. Lower rates equal higher demand and less supply. And that creates higher prices, more frustration, less opportunity. If you shopped for a home in the last 2 years, you probably felt this and saw it firsthand. Low rates were easily available. Most people just couldn't win a home to put it with those rates. The crazy part now is that so many people are not buying because of regret. They missed the low rates, so they've just decided they're going to sit on the sidelines and wait for them to come back around. But that's not how it works. If you tried and you didn't get a home last year, 2021 really doesn't matter. You missed it. Unless you got a time machine, last year's rates don't matter. The real question is not should you have bought in 2021. The real question you should ask yourself is should you buy a home now? Or does it make sense to wait? And again, the data says don't wait. And again, I wanted to be fair, so I put this together with rates steadily going up over the next 2 years. So we're looking at rates all the way down to 3.5% if you decided to just wait. So you're going to get to that better rate, and we're going to see if that by waiting, if that pays off with the lower rates. I started at 7% if you bought today, keeping with the meme, and then rates dropping to 6.5 in 6 months, and then another full point for every 6 months after that. So like the meme example, you do save money on the monthly payment by waiting. But what's your cost? Financially, what does it look like to wait? Again, use historic forecasted appreciation, so not just random numbers I made up. And as you can see, the monthly payment savings goes up as the rate goes down. And if you waited 2 years, you're going to save about $10,000 by waiting for that lower rate. But waiting 2 years to save $10,000, it still costs you $60,000. And in fact, just waiting 6 months could cost you $8,000. And a key piece to remember is that as rates go down, demand goes up. As demand goes up, it means the price of homes will go up as well. So the total cost of waiting could be substantially more than this in a low rate environment. And maybe missing rates, maybe the rising rate is created an affordability issue for you. I still recommend buying, even if you do have to adjust your budget. Let's say you dropped that purchase from $620 to $500. Even if it's not that forever home, you're still building equity and appreciation. And so in this example, 20% down, you'd have around $150,000 to put towards that next home. Maybe in this scenario, you're just dating the house with a strategy to move up in the future. But now when the market shifts and you're ready to pull the trigger on that next home, you're in such a stronger buying position and you can compete with those high demand offers. When rates drop, the equity and appreciation you earned gives you more capital to compete. But if you pay rent, tell me what part of the last couple of years of rent payments are you going to be able to use towards the purchase of that dream home? And the answer is simple. It's none. Because if you don't buy, you're probably going to rent. And there just isn't a lot of upside to rent. Rent prices are skyrocketing, and the only guarantee you really have is that they're going to continue to go up. Based on rent.com data, look at what it means to your budget at renewal. It is crazy that so many people are waiting to buy a home because the rate is too high while renting, which means rates are too high for you to own, but you're okay paying 100% interest on rent. Give that some thought. At the end of the day, though, you're still paying a mortgage. It's just not yours. You're earning equity and you're creating wealth. It's just for someone else. I really want you to get those benefits. I think you deserve them. I think every American deserves them. They add up and they are significant. Vacancies are already at all-time lows and rents are rising. COVID and supply chain shortages have created less housing starts. Household formations show an increase over the next several years. What that means is more people with less housing equals higher prices, both in home prices and rent. And right now, current rent is on average 13% lower than an average mortgage. It's not a ton, but you can count on it to go up. It's not a stable payment like the mortgage is. What does that constantly increasing rent payment look like for you in the next year, in the next 5 years? So is it a horrible time to buy a home? I don't think so. Ideally, we would all love to get low rates and great deals, but that's just not how supply and demand works. Right now, there's less competition. Sellers are willing to negotiate. They're willing to make repairs, provide incentives, so you can get a win on the hardest part of it all, the most important part, the home. And regarding rates, there's a lot of options to get your rate well below the 7% example. We're just verifying the legitimacy of a meme, which again still sounds ridiculous. The benefits of owning a home are clear. The benefits of buying with less demand are clear. Maybe you have to adjust your strategy a little bit, but get in the game. Start creating wealth for you and your family. If you'd like us to put together some of these reports specifically to your situation, to your location, to your options, etc., just reach out. We're happy to provide you the data, answer questions, and create a strategic mortgage plan for you. There's no obligation or cost. Just let us know how we can help you best. Thanks. Take care.